So, thank you for being here today, Zayn.
Thanks for having me. How are you?
I'm good. So, could you tell us a little bit about yourself and your career?
Yeah, so I joined Scorpio Gold as the CEO at the beginning of last year. Started my career as a software engineer. Sold a software company, exited a software company in 2017, and living in Vancouver, had access to a lot of different mining projects and mining investment opportunities, and started investing in different companies. And in 2023, had optioned a gold project adjacent to Scorpio's Mineral Ridge mine. And on the back of that, had the opportunity to kind of understand a little bit more about the position that Scorpio was in. And we kind of really understood that they were in a tough position financially, really needed kind of some new blood, some new money, and to really restructure the business. So we took over Scorpio at the beginning of last year. And with that was really on the reason for doing so was really driven by the opportunity that we saw with Manhattan.
How would you say that Scorpio stands out, if you compare it to other junior explorers, especially gold explorers?
Yeah, so I think we have all of the key elements that really set us up for success. Number one being that we have great shareholders and really great investors behind us. And if you look at kind of the junior mining sector as a whole, there's probably 500 to 1,000 really great mining investors in the space. And if you have even a fraction of that, or kind of a subsection of that group invested in your company, and you have them working as a team behind your company, you really are kind of in a much you have a leg up compared to a lot of the other assets. There could be 1,000 or 2,000 great mining assets and great mining companies and projects that could actually become mines out there today. But very few of them will actually end up ever becoming mines. And call it that one thing that makes that biggest difference is having the right team behind you, and that team expressed not only from a technical side but also from an investor's perspective as well. So I think one of the things that Scorpio has is obviously a great investor base, great shareholder base, and really great support from the technical side. But two is obviously a good asset. And when you look at Manhattan as a project as it stacks up to other projects in Nevada, I would say that grade is really key, and that is one of the standout features of what we have. If you look at other projects in Nevada, grade is sub a gram on average, pretty consistently. The fact that we've just delivered a resource at 1.26 grams, with two historic resources alongside that are even higher grade. Now, we're fully conscious that grade on the historic resources probably will come down. Still, we do feel very confident that we really do stand out as a truly district scale opportunity with an unmatched grade.
You added Leo Hathaway to the board as executive technical director, and is famous as Ross Beaty's lead geologist. Could you tell us more about that and what he sees in the Manhattan project?
Yeah, so Leo came to site in January of this year, and I think he would be the first to tell you that he was pretty amazed at kind of the scale of the opportunity. I don't think he realized how big it is. We have nearly 10 kilometers of continuously mineralized strike with 11 past producing mines all along that entire structure. And we're talking about a resource that we put out that exists just in 2 kilometers in the center of that. And you have two historic resources at either end. You really do have this opportunity to build something truly district scale and something quite large. And that's to say, like, we're pretty comfortable in saying that by the end of next August, we will be at 2 million ounces, with the money capital that we have, drilling 50,000 meters over the next 12 months. But there really is expansion potential beyond that in our minds too. And if you think about the core resource that we put out being bottoming out at 200 meters, it's open at depth, it's open along strike. I think the thing that really stunned Leo was just the scale of opportunity to build something very large, and then furthermore being in Nevada. So we're not talking about something that's in South America or call it not a tier 1 jurisdiction. We're talking about something that's right in our backyard in one of the top mining jurisdictions in the world, and also one of the mining jurisdictions that has the most attention on it right now in today's kind of geopolitical climate.
In our last interview, you said that you most likely would sell Mineral Ridge. That has now been done. Could you explain the deal terms?
Yeah, so we sold Mineral Ridge for all cash. Realistically, as we probably talked about in the last interview, Mineral Ridge is it's a very tough economic project economically, and it really wasn't the right fit for our investor base and what we're trying to achieve. So selling it was really great, and I think the fact that we were able to realize an all cash deal was even better, and it really does allow us to fully invest in Manhattan. So it's a $7.5 million US dollar cash sale, $5 million we've been paid already, and then $2.5 million over the next 12 months. 11 months now.
So you have also filled up the treasury even more with the 8 million, which was mainly from Ross Beaty and Eric Sprott, and then a few from the Lumina group, which Ross Beaty leads. Could you talk about that financing? Why the timing?
Yeah, so we the financing was like the financing came together very quickly. I think it was really speaks to the Leo's confidence in the asset, the fact that we were able to get the support of Ross, and fully conscious that that was really driven by confidence in Leo more than anything. And then yeah, we just having Ross and Eric's support, also in the context of kind of a very strong gold market, as we've seen the price of gold move in the past 6 weeks really heavily. I think it's great. Like, I think it does set us up for success. It allows us to really focus on Manhattan, be very aggressive in drilling. Today we're sitting on over 12 million in cash, with an additional $8.9 million in outstanding warrants that come in every day that are all in the money. So we're fully financed to achieve 50,000 meters in the next 12 months. And I think on the back of success that we have with the drill bit, we're going to have 3 drills out there by mid-August or mid-October. We have 1 out there right now, 2 more in mobilization as we speak. So we'll be delivering drill results very consistently to the market over the next 12 months, on a, call it every 2 weeks to 3 weeks. And I think that's a lot of catalyst for the market to really understand the opportunity and the scalability of what we're trying to build. And on the back of that, maybe there's an opportunity that we do a larger financing and a much higher valuation, and get 5 drills out there, 6 drills out there in the next 12 months. But really, at this point, we're fully financed for 12 months. We just want to kind of see how things play out. We want to deploy the capital that we have in the treasury, build as much value as we can, build up our valuation, show that we really do believe this is district scale, much larger opportunity, and we're undervalued even at today's market cap.
Are you fully funded to complete the 50,000 meter program?
Yeah, including the warrants. Yes.
Yes. Okay. Good. And how much of the program is RC and how much is diamond?
So it's roughly, I say 50,000 meters because that's the minimum. So it'll be about 50-50, 50% diamond, 50% RC.
So speaking of which, I think maybe you could explain what's the overall or the overarching objective with the drilling program.
Yeah, so adding ounces more than anything. I think there's 400,000 ounces of uncategorized resource that was not included in the compliant resource. That's low-hanging fruit that we can add very quickly. So we have the drill working on that right now. But then beyond that, it's really just it's adding ounces. That's our core focus. And then on the more exploratory side, it's proving up the opportunities that exist at Keystone Jumbo and Hooligan. So these are 2 historic resources that were referenced in our recent press release with the resource. They exist at either end of strike. Very high grade, call it 5+ grams per ton historic resources average, 300,000 ounces collectively. Those resources collectively present a great opportunity, not only to potentially upgrade the entire average grade of the resource, but also just be low-hanging fruit to add ounces, and that's the path towards getting to 2 million ounces by the end of next August.
Could you summarize the mineral resource that you put out?
Yeah, so 740,000 ounces at 1.26 grams per ton, pit constrained. You can see all the information is in the press release there, and that, as I said, that exists in the core zone. It's based on over 90,000 meters of historic drilling. And I think as I said, there's another 400,000 ounces that was left out of that because it was uncategorized, and it was Cap 4, so we do need to upgrade that, and we're going to work towards that in the short term to continue to add value and be accretive to the resource.
So thank you for being here, Trey Harrison.
Thank you. Thanks for having me.
So could you tell us a little bit about yourself and about your career?
Yes, so I'm Harrison Pokrandt. Been a geologist working for about 10 years now. I started most of that 10 years I've been at B2 Gold. So at B2 Gold, I help run projects over in multiple countries, including Uzbekistan, Finland, Japan, West Africa, and all over North America as well. So now I'm over at Scorpio Gold as the VP Exploration, where we're exploring our Manhattan district in Nevada.
Could you first of all showcase the mineral resource estimate that you put out?
Yes.
We'll start with the current mineral resource estimate and essentially tell us what you got, what assumptions you used.
Yep.
Yeah.
So I'll flip through some slides here. This is our updated deck. I'm not sure if Zayn has shared or presented some of it here, but we've got some of the some figures in here to show the resource. So I'll just go ahead to talk about the resource here. Here we go. So this we just put out, as you saw a few weeks ago, we put out our maiden resource of 740,000 ounces at 1.26 grams per ton. So that resource there, we've assumed 90% recovery, as the historic met testing can suggest up to above 90% in a milled scenario. And this resource has 400,000 ounces of uncategorized gold that we are going to be immediately drilling as well. So this is a bit of a modified figure from the news release there, where we also showed some of our distal targets that we announced. So in there's kind of two separate numbers. There's that 740,000 ounce resource we announced, and then there's also about 300,000 ounces of resources distal to our main resource area. So in this slide here, I'm just showing in this yellow area here are the shapes just for our maiden resource here, but the pink diamonds, so Black Mammoth here, Hooligan over here, Keystone and Jumbo and April Fool all have historic resources on them, which total about 300,000 ounces. So those are there. It's from a report from 1997, the pre-43-101 resource that we're going to be immediately converting to 43-101 compliant, that we want to have in an updated resource within the next 6 months.
So first of all, let's move to your current resource. And
Yep.
Is it one pit or is it several pits? Could you showcase it more closer where you got Gold Wedge and the Manhattan pit?
Yes, so it's all one pit. I should have I've got a long section here I can show to show the pit there. Let me, if you don't mind me skipping slides here, just to show some of these.
No, definitely.
Yeah, let me get to here we go. Here's the long section. So you're looking at here, it's more or less, I guess it's two pits right now. You're looking at one main pit. If you look on the right side here, actually I'll go eventually here to a bit more of a blowout between these, but you're looking at one main pit as you connect. So there's the Gold Wedge underground is just in the long section here on the left side. And then as it comes towards, there's the west pit just down here. And then there's the USD pit also here. So all of these are going to be connecting into one big pit. And we're actually going to be drilling to connect as some structures go towards, there's the east pit right here. So these are the two pits there for the main resource, but we're looking at combining it into one pit.
What gold price assumption was used in the resource?
So this resource used at $2,500 gold. Yeah.
Okay, and did you assume any strip ratio?
So yeah, the strip ratio is about 4-to-1 for this resource. This resource just goes down to, if you can see this black line here is the pit outline as for the current resource. It just goes down to a max depth of about 200 meters of the current resource. So that's what we're targeting to add on to as well. Next is all the shallow ounces here.
How much of this are oxides?
So it's actually we're going to be doing further met testing on this. But because it's a free gold system, below the oxide horizon, it still acts reacts with cyanide. So you're looking at, most of this is assumed to be at a 90% recovery, where it mostly acts as if it's oxide. I'll go to here we go. So this slide shows when you're within the sulfide horizon, it's about halfway through the pit. So you're looking at 100 meter depth to the oxide horizon. So it's about half and half oxide sulfide, but in the sulfide horizon, your sulfides are not actually associated with the gold. So this is a sample from the very bottom of one of the pits here in this image, where gold is not intermingled or interacts with any of the sulfides. So this was actually in the fresh rock horizon, this was heap leached at 77% historically.
So if the first 100 meters are oxides, I assume that you would mill that. now in the resource?
Yes. Yeah, we'd be looking, this will be in further updates to the resource. We want to first try to get to a 2 million ounce target before we put together more economics. But, because our resource is at 1.2 grams, you'd look at a milled scenario. Potentially you would heap leach the low grade in the area, but you'd probably mill, to get to a 90+% recovery on a +1 gram resource.
Okay, and this is a pit constrained resource, so that's good. And
Yep.
it was all historical drilling. How much of the
Yeah.
historical drilling could you actually use? I mean, what are, because I think you had like 100 and, was it 30 or 40,000 meters of
Yeah.
historic drilling?
Yeah. So we've used about 90,000 meters is just within the resource area. About 20,000 of those meters, if I remember, it's 20,000 of those meters are pre-70s drilling, which we couldn't use for the resource, just as being older data in that. But the rest of that drill, so that's 110,000 meters. The other 30,000 meters is actually outside of the resource area.
How do you explain that total? Obviously, I mean, that 70 meters of 12 grams per ton is insane. Have you seen, is that core still around? Can you see it, or do you have all the
Yeah.
logs?
So we've got all the logs, we've got all the assay certs for these. I remember when we found this hole, it was quite exciting. So we've got all of those. This is most of the drilling historically is RC. So this one would have been an RC hole historically, which we don't have the chips or anything for, sadly, being pretty old as well. But we've got all the data, all the assay certs for it.
I mean, that hole, 8316, is it nuggety, or what does it consist of? How do you explain that grade?
Yeah, I mean that most of that hole, is actually I should have a section for it, but it's all above 5 gram. Let me just pull up the section here. There we go. It's all mostly above 5 gram material. So it's actually, this hole right here is the hole. It comes down, or no, I believe it's this hole up here. Anyways, but you're looking, actually no, it did end in the bottom here. This hole at the bottom here, it ended in a 7 gram sample. And you're looking at, the true depth of it is just about 200 meters on that. So it more or less followed through as you get in the limestone here, and you get your main structure, which goes more or less vertical. It intersected as you get more grade when the limestone and the fault hit.
And when you used your cost assumptions, did you benchmark it to other operating deposits in the Nevada, or how did you use that?
Yes, we've used some benchmarked assumed prices in the resource here. We'll have all the numbers. The resource it'll be published in the next month here. But yeah, we've used benchmarked numbers for Nevada, and then so it's actually as well. It's a 0.3 gram cutoff in the resource on it as well. I'll go back here actually to that original figure I have here. Let me just get to it here, just to show the range. So just on the right side here, we have the table. This was in our resource news release. So with the cutoff, so at a 0.3 cutoff, you're at 740,000 ounces. But even as you go up to a 0.9 cutoff, you still have 540,000 ounces. So you're, as you trade your cutoffs, you still continue to have your grade on the resource.
Does the strip ratio materially, increase if you raise the cutoff? So 0.5, for example.
Yeah, your strip ratio is going to be a bit better as you're going to get a slightly shallower pit if you go higher in your cutoff grades. But yeah, you're looking at, I believe between the 0.1 to you get up to like a 5-to-1 strip ratio. Yeah, but like at 0.3, you're staying to around 4-to-1.
How much of the resource of the ounces sits in the west pit, and how many sits in the Gold Wedge pit?
So you're looking, it's roughly about 70% of the resource would be south of Gold Wedge. I'll go to a plan view here so we can take a look at it. Here we go. So this is actually our expanded drill program here. but you're looking, so Gold Wedge is just up to the north here, but you're looking at the main bulk of it just to the south here. So you can see the West Pit's just right here, and then the bulk of it is just north of the West Pit here. And as you wrap around the West Pit, if you see that, and just up here is the bulk of the main resource. Yeah.
So essentially, that historical drilling, how comfortable are you with that, or with historical pits, historical resources, I guess?
Yes. So those historic resources. So those are. I'll go to the map here to show. Pardon me, I'm flipping through back and forth quite a bit. Let's just show here where those are. Here we go. So those historic resources are the ones you're mentioning here. So Black Mammoth up here, Hooligan to the northwest, and Keystone and Jumbo. These were more constrained resources. They were actually at a 3-gram cutoff in tighter vein sets. So this resource we're looking at, more like a 0.3-gram cutoff. So these were higher grade constrained resources that we're going to look at more of an open pit scenario with a more modern cutoff grade. So we're pretty confident in those numbers. We have all the historic drilling as well in the area here for us to use with assay service as well for the resource.
How do you expect the resource to change when you go through an open pit and lower the cutoff grade?
Yeah, so these historic resources, like, of course they make assumptions in them. So as we lower the cutoff, we're going to be getting more gold within this pitted scenario. But as well too, these constrained resources sometimes when you bring to modern standards will shrink a little bit, but you combine that with a more open pit, lower cutoff scenario, they usually hold together pretty well.
Is it April Fool that you expect to be the biggest, given that has the amount of answers, at least now with the in a non-pit constrained resource?
So as you look, so Keystone and Jumbo just to the southeast here. So these two pits. It's a series of pits about 650 meters away from each other. So Keystone is about 100,000 ounces here. I'm just checking the figures here. I'm seeing the numbers of possible. Yeah, I'm noticing. I'll fix those figures here when we're putting up. We're just updating this right now. But you're looking at about, with Keystone and Jumbo added up together, you're looking at 150,000 ounces here. In the historic drilling. So yeah, I'll fix these total numbers here will be changed. Of course, this table here is the possible. Anyway, so yeah, you're looking at the larger area of Keystone Jumbo would be the higher combined is there. Yeah.
So now the question is, you are drilling. You will in total complete a 50,000 meter program between RC and Diamond. Could you explain what objectives do you have with that program?
Yep. So I'll go over here. I've got a plan map here of part of the new program. So a part of the new 50,000 meters here, we're going to be stepping out and connecting pits. So you can see a lot of this plan actually on the map here is converting the uncategorized ounces in this map here. This is where we're currently drilling actually, is where the drill is right now, is the yellow dot here. So you're looking at about 10,000 meters is going to be put together to convert this 400,000 ounces of uncategorized ounces. And then the next 40,000 meters is going to be connecting all of these separate pits. So just south of the West Pit here is the USD pit, which is just under this resource here. So you can see we have these fences of drilling here to step out, connect them, and get them to a larger depth. So this is going to be, most of this 50,000 meters is still within the core resource area to add ounces there. Because as you can see in this slide here, I've got these shapes here are just to highlight these areas we want to connect. So that phase one, where we were last talking, I believe, is right between Gold Wedge and the West Pit here. This is the historic claim boundary here. Where the structure, of course, continues through. So where you can see the pit here dips up to less than 50 meter depth, as this has just not been drilled and is uncategorized ounces. So we're bringing
Where's
this
the
down
gap
to that.
zone?
The gap zone is this right here. Yeah.
So that's among others where you will fill in.
Yeah. So that's one of those zones that we're going to fill in. You can actually see below the west pit at depth hasn't been drilled, but right beside it here, where the core of our resource is just north of the west pit, right here, we're going to be bringing all that resource down to that 200-meter depth. And you can see the USD pit here as well. We're going to be connecting these blocks to the west pit blocks here and bringing it to that depth as well.
So roughly to what depth are you drilling here, or in and
So
around the resource?
Yep, the drill holes, as a true depth, we're bringing everything to a 200-meter level. So at an angle, your holes are about 300-meter depth. But we will also be putting in some deeper holes, as this has never been tested at depth. You are also, we're, as an epithermal deposit, we're in the boiling zone. So that's usually right at the top of an epithermal system. So you've got quite a bit of depth that you can test when you're at the top of an epithermal system. So we
this
will
has
put a
been
few
quite
deeper
eroded
holes.
then, it's a low sulfidation epithermal system, but it's right from surface. It's not 200 meters down.
It's actually it wouldn't be very eroded because the boiling zone is usually right at the top where the surface would be. So above your boiling zone you have your sinters, which is this quartz flooding that you get, Yellowstone and places like that. So we're just below that, which is usually where your gold starts to form. So there is quite a bit of depth still to play with.
I mean, do you have any expectation on how much you can accomplish with 50,000 meters?
Yep. Yeah. So our goals, as a part of this drilling here, so we've got our 740,000 ounce resource. We want to convert another 400,000 ounces. Plus adding this historic 300,000 ounces, if we're able to add by connecting these pits, if we're able to discover with this 50,000 meters another 600,000 ounces, we can get to 2 million ounces in 12 months is the goal.
How fast do you expect to complete that 50,000 meter program, and how much have you drilled now?
Yeah, so we're about 7,000 meters we've done so far this year. We're going to look at getting that 50,000 done in the next 12 months. Yeah. We're going to be expanding from 1 diamond drill to 2 diamond drills and an RC rig.
Yeah, I would also like to follow up on, I mean, you released hole 11 and hole 12.
Yep.
Were these the first 2 holes drilled?
Those here are these ones. Those were the first that we started drilling this year. So we're actually all of these holes now. This is the phase 1 drilling that we did at the start of the year. So all these holes are in the lab right now. So that we're just waiting for assays on. So we should expect those within the next week or 2. We're going to get those results and put them out.
And how would you interpret? I mean, hole 12 didn't really hit anything significant. Hole 11 was, I guess I could call it a classic Scorpio intercept, 92 meters, 1 point, I can't remember the exact grade. Yeah, 1.24 grams per ton.
Yeah, so we hit here. So this is that gap zone between Gold Wedge, right? Gold Wedge is just up here, right where you can partly pick out here the historic claim boundary here, where it's not been drilled to connect. It's the same structure that goes through. So that's what the initial goal here was at the start of the year, was to close off that zone. So that's where the 1.24 grams over 92 meters. So you can see through here, this is the gap zone as we drilled through it here. And we actually hit a deeper 1.5 grams over 25 meters. So that's actually below that 200 meter horizon. That was, the historic depth that's been tested. Hole 12 as well. You're correct. We didn't hit, as much grade in this one. But as it looks, we must have gone a bit parallel to the structure on that hole. And as you actually get into the limestones near Gold Wedge, the grade starts to move from the structure into these limestones. And as the limestones are faulted, we missed most of the limestones in that hole there. So this was a good learning hole for us on that one as well. So the next results should be good.
And roughly, where have you drilled so far, and where are you looking to drill with the new rigs coming in?
Yeah, so we've drilled out this first phase 1 here. So all of this is now complete. So we've more or less drilled to bring this down to that 200 meter depth, this gap zone. Hole 17 is a hole where the historic stope designs for the underground mine at Gold Wedge, last year we drilled to step that out, and that's where we hit last year 1.69 grams over 55 meters. So we've now to do another step out here is hole 17. And then we've also drilled just to the southeast here is Mustang Hill. So there's some uncategorized ounces that we've been converting over here. But historically, there was in 2021 there was a 4 gram, 3.98 gram over 41 meters drilled here, and actually just below that right here is about 120 meters at 0.8 grams as well, which we've been following up on that drilling. So that's been what we've drilled so far this year. Is drilling more of Mustang Hill and the Scap zone. And then the next drilling is right away is to start converting those 400,000 ounces of uncategorized resource, which is most of this map here, is most of that conversion drilling. In the core resource area here, there's a few blocks there that are easy to start to convert. And then as you start to step to the south as well down here, as we start to connect those pits.
When do you think you will update the resource again?
It's a good question. To say that there's not going to be a update between now and next August, it is possible. I think we're just going to kind of see how things play out and be strategic. I think we'll be able to easily illustrate to the market that we're growing it very consistently. But I'd say within the next 12 months, there probably will be some update one way or the other.
What's the next steps in terms of metallurgy? How are you thinking around an economic study, permitting, early stage permitting work?
Yeah, we have 4 distinct histories of mineralization of production. So we have a lot of metallurgy to go off. That said, we do want to do a modern flow sheet for the entire consolidated resource. So that's what we're working on right now. And I would say that Q2 next year is probably when we'll be able to deliver those results to the market.
How are you thinking overall around Manhattan? Do you think this will be a standalone mine, or do you think it will be, become mill feed to Round Mountain or another heap leach?
I think it's anyone's guess at this point. Our focus right now is build resource. We want to build inventory, get our resource to 2 million ounces, show scalability beyond that, build something very large. At high grade, and continue to have a path to continue to be accretive on that in 12 months and then beyond. And then I think we'll see how things play out. Like the Round Mountain opportunity is very interesting, and I'm not going to discount that at all. But at the same time, there probably is it does have potential as a standalone mine. I think when we really started this, Round Mountain was a big focus for us, but now just looking at the scale and the ability to really build something much larger, it does have so much standalone potential, and we're going to really take that seriously.
Perfect. And you already alluded to it, but how are you thinking around the next round of raising capital and maybe bring in a strategic?
Yeah, I think strategic is 1. 2, we are looking at doing a US cross list as well. In the near term, so using the MJDS ability to do a cross list in the US. So that's also in the pipeline as well. I think we're going to prepare things for that, and maybe a US sublist is sooner rather than later, and I think that would be a great catalyst to do a raise. But we definitely don't want to do it at these levels. Like I'm thinking $1 Canadian equivalent would probably be where I'd want to be doing the next financing.
So with that, where do you envision Scorpio Gold at the end of next year?
End of next year, 2 million ounce resource, with a path to build more. And we'll kind of see. The drill bit will tell us that, and obviously can't promise anything, but I think we have a lot of confidence in being able to get there.